All right, guys, we're back here for another episode of my weekly market analysis. And today, guys, I wanted to show you guys a blog that I wrote about the different styles of trading. I wrote this back in January, pretty much at the beginning of the year. And basically, I just go through what the different styles of trading are, from scalping to day/intraday trading, swing trading, position trading, and whatnot. And I just wanted to show you guys the type of content that I'm producing on the website. And guys, if you're really interested in reading stuff about trading, investing, entrepreneurship, personal finances, please go and check out the website. It's newmillenniumwealth.com. And if you haven't already, please subscribe to the newsletter. Just hit the Get Started button. It'll take you to the contact page, which will allow you to enter your information. And I know on that contact page, it says to put your number in. Guys, you don't need to put a number in. You don't even need to put a brief description in if you don't want to, although it does help me to get to know you and to get to know my readership a bit better. But you don't absolutely have to do that if you don't want to. But yeah, if you're interested in any of this kind of stuff, we got lots of different topics here. We've got a lot of stuff on entrepreneurship, personal finances, trading, and we're constantly pumping out stuff every single day. So yeah, hit that Get Started button and start learning, start enjoying the content. All right, let's go ahead and get to the trading today. So this week, we had 3 different trading opportunities that are out right now. We got the Aussie yen, the CAD yen, and the dollar Swiss. But before we get into that, guys, most of you will notice that this week's video and last week's video are getting posted on the same week. Last week I recorded a video and everything, and unfortunately I just had such a busy week and weekend that I never even got an opportunity to finish the editing. I started editing the video and everything, and it's almost done, but I never got the opportunity to finish it. So these videos are going to be posted roughly around the same time. I apologize for that. Just sometimes, guys, like you all know, life just has a tendency to throw curveballs at you, and just has a tendency to mess up your plans. But not trying to make any kind of excuses with that or anything of that sort. It's just the way that it happens. So yeah. But I will have both of those videos out. I'm also going to be producing another video talking about online arbitrage. It's something I recently just got into. If you guys are going to be interested in that, I'm going to be posting a lot of episodes, just trying to show you guys what I'm doing. I'm going to be going out there and showing you guys my journey, and just kind of like with the trading, I'm going to be showing you what I'm going to be doing with it and the process that I'm going through. Right now, I have about $60 that I put into my first batch of inventory, and I went ahead and I shipped it off to Amazon, and I'm going to try to sell it for a profit on Amazon. So we're going to see how all that works out. I have pretty high hopes overall. I think that there's a very good chance that it could happen. So yeah, we're just going to have to wait and see. Okay, all right, let's go ahead and jump into the currency pairs. Let's start off with the Aussie yen. Why not? That was the first one I took. Okay, actually, you know what? I want to go to the actual chart. There we go. Sorry about that. Okay, so in this particular situation, as you can see, we've been in a bearish trend, probably going back to since February of 2019. I bet you if we scroll back, we've been in a bearish trend literally since November of 2018. So we've been in a bearish trend for a very, very long time now. We actually did close below this low right here. Let's see. Yeah, we did close below that low. And yeah, that's a further indication that we intend to head lower. And right now, we just kind of created this base here. We just came down. We made a new lower low, lower close, and we kind of just consolidated for almost 3 weeks. Just kind of chopped sideways for 3 weeks, not really showing any real market direction, unfortunately. But finally, last week on the 19th, we actually closed below, making a new lower low, lower close, and then we retraced promptly back into the fib retracement level. I drew my fib retracement level from here, swing high to swing low. And this is where I have my entries, my 618 retracement. For those of you guys who've been watching my trades, you guys know this is pretty much standard for me. This is how I would trade this trading strategy and whatnot. So we got a 618 retracement, which means we got our entry hit, put my stop loss 10 pips above the highs right here, and then put my target down here. So I'm pretty confident that this is going to go ahead and roll over and hit our targets and make a new lower low, lower close, but nobody really knows. After hitting this, you never know, we could continue to retrace higher. But for right now, it does appear as though this could work out. So that's the first currency pair we had. The second one, I believe, was what? The CAD yen? All right, CAD yen. The CAD yen is still a yen pair, just like the Aussie yen, and it looks what you'll notice is it looks very similar. A lot of times, currency pairs that have the same currency in them, and that's their commonality, are going to oftentimes look very, very similar. Now, their prices are going to be different, their exchange rates will be different, and whatnot, and sometimes the market structures are not going to look exactly the same. But I mean, you look at this, CAD yen, Aussie yen. Look at that. They look almost identical. I mean, yes, there are a few differences, but they look very, very similar. And that's just because they're both yen pairs. You know, ultimately, the CAD yen and the Aussie yen are both yen pairs, and they're going to move in a very similar way. So, what you can see here is that, and I didn't really point this out in the last one, but the market was, in fact, wedging. It was creating a wedge pattern. There's just a lot of market indecision going on. And finally, what happened is we broke below, making a new lower low, lower close. And then we came up here and are now retracing. We're now hitting resistance. So hopefully, like I said in the last one, we just consolidated sideways literally for nearly 3 weeks. I think it was like 19 days, so almost 3 weeks. And then we finally made a new lower low, lower close. Now that we got back up here and got entered into the trade, my hope is that we continue to fall. I mean, this is pretty clear cut, guys. Honestly, this is not a very difficult trade. It's not very confusing as to see what the market's going to do. I'm pretty certain the market's going to continue to roll over and hit our targets. But, you know, granted, nothing is certain. It may not happen. It could always rally and stop us out and break above here and just reverse on a dime like that. And that's totally possible. As you can see on the RSI, we are not overbought currently. And we were oversold back here right before we rallied and we retraced. And we're not really overbought. So we could come all the way back up here and become overbought. But even then, I would still say that it looks like that's not a massive indicator that this is going to reverse on us. So you never really know. This could reverse, or this could continue, rolling over and giving us some profits. And that's what I'm hoping for. That's what I'm hoping is going to happen. But we'll just have to wait and see. All right, next and final pair is the dollar Swiss. This one I actually didn't really think was going to get filled. Turns out it got filled back on the 19th. I placed my entry here and I just totally forgot. So I do apologize for not letting you guys know earlier. But like I said, life has been very busy for me, just with all the other stuff going on. So, unfortunately it happened. But hey, we're here now. Let's go ahead and see what's going on with this pair. So this pair looks pretty simple. Again, it looks pretty cut and dry. We've been in a bearish trend for a while now, and we are now looking like we're going to make a new lower low here. We created a new lower low, breaking below this pretty major structure level right here. We're retracing back up into a 618 retracement. There wasn't really a lot of structure in here to stop this. We hit some resistance right here. We kind of blew past that resistance, and we went oversold. So we have confluence on the RSI, which is always nice. Now you guys know I don't use the RSI to take trades. However, the RSI is very, very nice when it comes to confirming what I'm seeing on the charts. So I really like using the relative strength index. It's a really great resource just to kind of confirm and build my biases up. But let's be honest, I don't actually use this in my trading, because look, we got a bearish signal right here, and then we got a bullish signal right here. And in this instance, the RSI may seem amazing, and you may think, hey, I want to trade the RSI, but the RSI is not always accurate. We had an overbought condition here, and we had a slight little retracement here, and then we ended up rallying. We had a little oversold condition right here, and we rallied even more. It's not always that consistent. You don't want to purely base your trades off of any kind of indicator. You want to use these indicators as tools. That's what they're intended for. Same thing with the Fibonacci's, guys. Fibonacci retracements like this. This is the Fibonacci retracement tool. Okay, this Fibonacci retracement tool is just a tool. You don't want to base your trades purely off of the Fibonacci retracements. However, It is just a tool that can help you determine where to get long or short and things of that nature. I know that I place my targets here on the 618 fib retracement level. That's like the golden ratio. But in reality, I wanted, if it wasn't for the fib retracement, I probably would just do 50%, which is a little lower here, but I probably would do 50%. You know, the fib retracement level is just something that I know that is oftentimes respected in the market. So it's just a pretty good indicator on where to put your entries. So I use it to do that. But again, I would never do that purely on the basis of just the fib retracement. I also try to use technical analysis. I try to use chart analysis where I analyze the market movements that are occurring here. And I try to determine where to enter, where to get long, where to get short, where to put a stop loss and a target, all based off of my technical analysis of the charts. I don't determine these based off of the fib levels alone. The fib levels are just a tool that I use to help me make decisions, but ultimately my main goal is to read the charts, and that's what drives the ultimate decisions that I make. You know, if we didn't make a lower low, lower close here, I wouldn't even bother to look for a 618 retracement. If we only came to here, or even right here, I think, yeah, if this is all that happened and then we rallied, I wouldn't be looking to get short. I'm only looking to get short because there was a break of structure. We broke this support level right here. So I know that we're going to start hitting resistance somewhere in here, or at least there's a pretty good chance that we're going to, particularly when the markets are trending. Now that we're getting out of the summer months, there's a lot of big money, financial institutional money that's flowing back into the markets. So we should start seeing the markets trend a bit more than what we were when the markets were in consolidation. That's the general idea. However, we don't really know for sure. We never do, but that's the general idea. Normally during the summer months, we see a lot of consolidation occur. We see basically not a whole lot of movement. Sometimes there's either A, not a whole lot of movement, or B, there's a lot of erratic movement, but it's not smooth movements, okay? Now that, you know, more and more money is coming back into the markets, we should start to see things smooth out. But with how volatile things have been, with everything that's been happening in the news and interest rates from the Federal Reserve and a whole bunch of other international news as well, it's kind of hard to determine what exactly is going on sometimes, and it can cause a lot of volatility. So we're just going to have to see, but all in all, I think this looks like a pretty decent trade. You know, unfortunately, we did come all the way down, and we almost looked like we were just going to go straight down and hit targets, and I really wish that had actually happened. I'm hoping that this will just continue to roll over, and that this is just people taking their profits, and that this is just going to continue to roll over and hit targets. But, you know, again, I know I say this all the time. It probably gets annoying to you guys, and I do apologize for it, but you never really know. So we're just going to have to sit on our hands and wait. Just like with most everything else that we do here, we find the trades, we put our entries on, we do the work ahead of time. If the trade gets hit, we put our stop loss on and our target, and then we go from there. If I was honestly going to trade this, so some people have asked, how would you actually handle this in real time if you had real money on the line? And that's a really good question to ask. So I guess how I would honestly handle it is, if we were seeing this come up here, okay, let's actually let's go ahead and find a pattern that we could go ahead and consider here. All right, so we're gonna go ahead and move forward. Okay, so we broke below this structure low right here. So what I would do personally, why is that here? I don't want that. There we go. Okay. I would use the Fibonacci retracement tool from swing high to swing low. I try to line it up as best I can with the actual line. Okay, there we are. I would put my I would put my entry level here, and I would put my stop loss 10 pips above the high, which is pretty low for a daily chart, mind you, but it stays in line with what we normally do. So we're looking at 99.1. Yeah, 99. We're not even going to get 99. Actually, no, we did. Okay, we're at 86, 88. So, okay, 98.5. We're looking for 98.7. So, 98.7's right here. Like I said, for the daily chart, this is actually 10 pips is not much at all. So you might want to do a bit more than that. But just for analysis purposes, let's go ahead and go with this. So this is what I would do. Once the market makes a new low, I would track the market with my fib retracement tool. Okay? And if the market was to continue lower, I would lower my fib retracement tool until the market retraces and then makes a new lower low. But up until that point, as it just continues to move lower, I would just extend this fib retracement tool lower. And then once the market does make a new lower low and it starts to retrace, you know, I would place my entry here and my stop loss, and then I would wait. If the market was to roll over and make a new lower low, lower close, then I would cancel these orders and I would move on with my life. However, in this case, the market does, in fact, as we all know, because we saw it before I actually did this, the market comes all the way up, hits the entry point, perfect. Now that the entry point has been hit, now if I wasn't looking at this currently, I've got my stop loss on, I've got my entry point on. If nothing else, if the market just continues to come in and I don't come in until it's all the way down here, well, okay, I know that's a little sloppy, I know, but for whatever reason, life prevented me from looking at it. At least I was making more money. But I protected myself by having my entry and my stop loss on before I knew that my entry had even gotten hit. Okay? I would not put my entry on first and then not put a stop loss on. That wouldn't be a good idea, because then it could just rally against you or roll over against you, depending if this is a more of a bullish trade, and you would be out a lot of money. I mean, it would just constantly be going against you over and over and over again. So it's a really good idea that if you're going to set it and forget it type of thing, make sure that you put your entry on and that you put your stop loss on, and that way you have your orders on. Maybe you could have them good till canceled or whatever, and then you could basically just wait. So if the trade occurs at 8 a.m. in the morning or 6 a.m. in the morning or whatever, you are pretty much good to go. Your stop loss is on, your entry is on. Now it's just a matter of waiting until you come back in, you realize, hey, oh, we got filled. You know, that's great. We're already here. Maybe you come in several days late and you're like, okay, I need to put my target on. Target, boom, right there. Okay? Odds are you need to be checking it every single day, of course. But hey, like I said, life happens. So this is how I would handle it with my life. I would plan my trading. I would pick a trading plan that works well with my life. Don't plan your life around your trading. Plan your trading around your life. Your life is always going to win out. If you're married, if you've got a significant other, you know, whatever, you got a job outside of this, you have other things that take precedence over your trading, right? And I know that your trading, you want it to be many of you want it to be full time, and that's great. You should, but it's not full time right now. If you got another job, it's not full time. And you got to typically have a fair amount of money in order to make it full time. So you're going to have to be okay with adjusting your trading around your life. Do not try to center your life around your trading. You will go insane if you do that. Don't do it. You don't want to be watching the charts day in and day out. If you're married, trust me, she's not going to be okay with that. Or he. If you're married, your wife or husband is not going to be okay with that. All right? Or if you're dating, again, they're not going to be okay. They're going to want you to spend time with them. They're not going to want you watching the charts constantly. So plan your trading around your life, not your life around your trading. Okay, moving forward, so as we can see at this given point in time, yeah, it's not actually looking pretty good. We are not looking good at all. We got short. It's now going against us. We're starting to freak out a bit. This is why we have a trading plan. Doesn't matter what the market's doing. We tested this. We have a belief we've built up our belief in this trading strategy. We know that it's not always going to win. We know that we can stick with it. If you don't have a trading plan, then right now you're like, oh my gosh, it's coming up. I'm going to sell off early. Don't do that. That's why you have the trading plan. That's why you back tested it, so that you built up your belief in the trading strategy. I could have the best trading strategy in the world. I could give it to anybody, and that person is not going to be profitable with it. You know why? Even though it's been tested by me, it's been verified by me, it's the best trading strategy in the world, people aren't going to trust it because they didn't do it on their own. So this is why it's so important that you guys need to, whatever strategy, whether you're trading a strategy somebody taught you, or whether you're trading a strategy that you learned on your own, or that maybe someone tried to teach and then you tweaked it, whatever the thing is, you need to make sure that you back test it. Build your belief system in it. That way, when it comes against you, you have the mental fortitude to know to stick with it. Look at this. It consolidated for months around my entry. Months. Look at that. I mean, we got entered in January of this year, and now it's April. I mean, man, that would have been really hard to have had to stick with. We made a new higher high, higher close here, indicating that that's usually a bullish indicator, but did we falter? No. Granted, we had a lot of retesting here, but still, it's just, this is a lot. This is very hard to stick with. This is why you need the trading plan. This is why you need the back testing. But look, we had the back testing, we had the trading plan, we stuck with it because we knew this was consistent, we knew the strategy was solid, and we just keep moving forward. We keep holding and holding and holding. Oh, it's going against us. Should I sell now? Should I take early profits? A lot of people are going to be like, yes, take the early profits now. Take them. Honestly, if we didn't have belief system in it, it would be very easy to take early profits. But look at how much money we stand to make. All right. We got short at 75.27. Not going to add the decimal. And our target is 69.44. 583 pips. 583 pips. That should be around 5. If that's on a mini lot account, that's $583. Now, granted, I know that's not a lot of money when you consider that you got long in January, and you're now looking at not getting filled till probably sometime around August, July, somewhere around here. But hey, it's still good. I mean, I know that you've held it for over half a year, but still, that's still great. That's still not bad. Okay? Try getting that return anywhere else, right? I mean, besides, you want to know the truth? Well, the truth is that it would be very difficult to get a better return elsewhere. Just to let you know. I mean, try getting that with your savings account on your bank account, or maybe your interest rate with your bonds or something around those lines. Yeah, probably not going to happen. Okay, and then we went ahead and we finally hit targets. That's how I would handle it. I'd put my entry on, I'd put my stop loss on, I'd wait for my entry to get hit, I'd come back, I'd put my target on, and I would move on. And I wouldn't watch it. I would check, I wouldn't watch it every hour on the hour. What would typically happen is I would more than likely wait. I mean, I wouldn't be watching it constantly. I would watch it on a daily basis. So I would come in every day and I'd keep an eye on it daily. I would check it probably once a day, maybe even twice a day. But aside from, honestly, I wouldn't really check it beyond that. Aside from checking it once a day, I'd place my entry, I'd place my stop loss, and I'd go from there. And guys, as you can see, now I've said this many times. This strategy, I have not back tested this strategy out. Not yet. But I will say this. It's starting to seem like it's a pretty decent strategy overall. I get lots of trading opportunities each and every month. I mean, right here in the month of July, I got 20... What was this? How many? I got 29 trades. 29 trades in the month of July. And I got 10 trades in the month of August. Now, I will be honest with you, okay? The August trades here are far fewer, probably because I haven't been watching the market nearly as consistent as I was with the August trade. Just July was a much easier month for me to sit in front of the charts and look at stuff. August, I actually have had a very difficult time coming in every single morning. Just there's so much content I'm trying to pump out right now that it's made it very difficult for me to be in here every single morning. But I have been watching, and I still was able to capture quite a few trades. And now, as you can see, now we have 4 trades on that haven't been calculated. These could all be losses, and if they are losses, well then my profits are going to, you know, just evaporate. They're just going to die. But right now, due to my one nice trade I had on the pound Aussie a couple weeks ago, we actually had a $400 winner. And then we had a 157 and then a 104. And we had 2 losses, an $86 loss and a 145. But look, we're now profitable. $3,461. That's amazing. We're now officially profitable. So whether we maintain that profitability and whether that profitability continues throughout the rest of the year, we don't know. But we are profitable right now. Now, this performance is going to get a lot better once I test this strategy out on all of these currency pairs that I have on my TradingView account. Once I test all these currency pairs out, you know, I'm going to start dropping a few currency pairs from the portfolio because they're just not profitable. And we'll kind of go from there. But for now, just keeping track of this, keeping a running total of what's actually going on and just keeping track of the losses and the wins and everything, it just really goes to show you and shows you ultimately what this strategy is so far doing. And we've actually been up at 3,600 before, and now we're at 3,692. So this is great, guys. So hopefully this maintains profitability, and we'll continue on. Also, this has no money management factored in either. Once you start factoring in money management, that is literally the bread and butter of the trade. Once you've acquired an edge where you're making more money than what you're losing, then money management is what you start applying to this to really, how would you want to say, to really extend and increase your winnings, I guess. So when you're winning like this, you would increase your position size. So you would win here, you'd increase it. If your account reaches a certain point, you would increase it. So probably right here, we increased from 3,100 to 3,300. So this might be a good opportunity to increase position size. This wouldn't be 105. This might be 210. And then you would increase again, and then you would lose, and then you would decrease. So this would be 122, and then you'd lose again, and so you would decrease. And so you would constantly, you're increasing with your winnings, and you're decreasing your losses. But it's really based more off of the equity in your account. You wouldn't just increase it after every single time you win. Basically, the type of money management that I implement, or that I will implement once I'm trading live, that is really where once I hit like maybe $3,500, then I would turn around and I would increase the position size, which would suck right here because I would lose, and then I would decrease the position size, but I'm back at 3,600. So I would have to customize, and I would have to basically identify at what point in time, what kind of a percentage increase do I need to see in the equity of the account in order to, you know, basically go ahead and increase the position sizing so that I can increase my profits. And this is what we would call smooth ratio money management. And we'll get into that a bit more at a later time because I'm not the best at teaching that, or showing you guys that information. I'm not the best at teaching it for sure, but we will get into that at a later time. As of right now, though, we're still just working on becoming consistently profitable and finishing out backtesting and all that kind of stuff. So, all right, guys. Well, hey, if you enjoyed it, please like the video, subscribe to the channel, and don't forget to go check out the website at newmillenniumwealth.com. Subscribe to the newsletter. You will get everything. You will be the first to know whatever I post. If I post articles, if I post any kind of videos on the website, you guys will get involved. Also, make sure to hit that alert button so you guys are alerted anytime I post anything on YouTube. And guys, don't forget to share the channel. Don't forget to share these videos and to just let people know that we're out here, that we're trying to grow a community of individuals who all want to help each other become financially free, and to let people know that we're trying to build this wonderful community up to help each other out. All right, so if you guys will do that for me, I will see you guys in the next episode. Remember, know the risks, plan accordingly, and have a great day.